Hey, hi everyone. Welcome to another video in our predictive AI models series. Today we are going to discuss about transformers, AI models, which are used in LLM, language learning models. But these models are now being used in trading as well as in trading for predictive modeling. And they have very impressive backtest results. And we will go through specific examples of these backtest results as a part of the video today. So, what are these transformers? Transformers are a set of AI models originally developed for language tasks. Uh, these models basically what they do is they go through the in a sentence. Basically, once you give it an input data, it goes through the basically the words or certain sentence patterns that weigh more and that matter more, and then it will predict the future words or the sentences in the language learning models. That's what these transformers are, and these transformers, which are a class of AI models which are used in language tasks, are now being used in finance also, and they are making waves in the financial markets for predictive modeling. Okay. So, what is the basic advantage that you will get when you use transformers in trading is the first thing is structure. So, what these transformers do is they use something called as an attention mechanism to identify and weigh relationships between different pieces of data. So, example, if you give it a past price movement to it, then it will itself identify which part of this entire past price movement data that we have given weighs more, and it finds the relationships between the different pieces of past data that we have given it, and this is done through something called as an attention mechanism. Okay, the second thing is the purpose. Why we are using transformers is the purpose is these transformers don't instead of treating each point equally, each data point of the previous past prices equally, what they do is they learn which events or the matter most for future predictions. So they are able to identify the events that matter most for the future predictions, and it has an edge also. So that's why they are using this transformers in trading. These transformers are able to handle long-term dependencies and complex patterns more flexibly than traditional models like LSTM, which stands for long short-term memory trading AI model. So these have an edge, these transformer AI models in trading, and the basic main things are attention mechanism to identify and weigh the relationships between different pieces of data. That's the main thing, and the data that we give it to is the past price movement data. And the other thing is that it doesn't give equal importance to all the price movement data. It is able to find which data is more important, and that can be used for future predictions, and it can also analyze, it's flexible enough to analyze complex patterns also, and long term data also it is able to analyze. So that's the reason these transformers are finding use in trading. Okay. So, why these transformer AI models matter in financial markets are the main use cases or advantage that we get out of these transformer AI models are capturing long-term trends. So these models are very good at capturing long-term trends. They can track patterns over weeks or months, and this is very good in a trending market or slowly moving trading scenarios. So they're very good at capturing long-term trends. That's the first advantage these models give us. Second thing is integrate textual data. So what these models can do is some models are there in this transformers like Finbert. That is a transformer trained on financial text. Okay, and what these Finbert can do is it can give a sentiment based on news headlines, tweets to the pricing models. So sentiment can be given based on some analyzing the textual text data, financial text data from financial news headlines, tweets to the pricing models. So that is the main advantage in integrating the textual data and doing a sentimental analysis and giving it to the pricing models, apart from capturing the long term trends. The third thing is it can adapt very quickly. Transformers can automatically recalibrate these attention weights when markets shift. Okay, so it has this attention mechanism, right? It is able to identify which particular price movement in the past is very important for prediction. So once the data changes, it can recalibrate itself and learn itself, the new attention data or mechanism data that can be used for predictive modeling. So some of the real world backtests of these transformers are, the one is quant former. So this quant former was done on China equities. The setup was around 4.6k stocks across 10 years of data was basically taken in Chinese market, equities market, and given to quantformer, which is a transformer again, AI model. And what it did is when it the predictive modeling of these particular transformer is it outperformed 100 standard factor based models in predicting, and the returns are better than 100 standard factor based models and with low turnover. So that's the result that was found when it was tested on 4.6k stocks across 10 years of data in Chinese equities market. What this demonstrates is the ability to detect sentiment influenced signals and to improve the forecasting. Okay. The second thing is day trading strategy on Middle East stocks is also done. So here the method is a combination of transformers and technical indicators was used in this particular back testing, and profit target was based on the risk. So that was what the back testing was done. So transformers plus technical indicators on and on Middle East stocks, and target is based on the profit target is based on the risk. The results of these particular backtest results are it delivered consistent profits when targets were modest, like 1.5 or 3.5 of the risk, and it significantly outperformed the buy and hold strategy. The other example is momentum transfer in equities and futures. So, approach was a hybrid of attention mechanisms and LSTMs. So here, the transformers plus long, short-term memories, both models are used here, and in the equities and futures market. And this performance averaged 4.1% returns, but the Sharp ratio was one is to one S&P style trading, compatible to traditional momentum strategies. So even in the momentum strategies, it is outperforming the traditional momentum strategies, and even in the day trading strategies also, it's outperforming the buy and hold strategies when the risk to reward is properly managed, and it outperformed over 10 years of data also in the Chinese market, and the 100 standard factor models. The other thing is high frequency Bitcoin HFT. This was another backtest done. The model is HF former, tailored for ultra short time frames. So HFT is high frequency trading, that too in Bitcoin. So this is for ultra short time frames. And transformers are used. The transformer name is HF former, basically high frequency trading transformer, short form of that. Outcome of this particular thing is it achieved high cumulative profit than the LSTM based models during back testing. Okay, so this transformers is a new thing happening in AI, and it's giving very good results compared to the even the traditional LSTM models or the traditional momentum models, or the day trading models. When backtested on certain um, on the Chinese market, the Middle East stocks and futures and high frequency Bitcoin trading. So yeah, combining transformers with other techniques is also giving good results. Like in one example, we have seen that transformer was combined with LSTM. So combining memory from LSTMs with the attention from transformers is improving the accuracy and consistency. That is one of the key things that's happening in this AI trading models and sentiment models. So transformer is very this is its speciality, having able to read the text and find the sentiment from the text. So pairing this Finbert, which goes through all the financial news, tweets, and all that, and able to find the sentiment with structured models is enhancing the prediction accuracy of the stock movements. So how traders use transformers today? It's signal generation. So basically predicting next day moves, intraday high lows and volatility spikes. So signals, for signal generation they're using, and sentiment overlay, combining the market outlook from news with technical signals for better insights. And so sentiment they're able to combine it with their technical analysis or fundamental analysis by and able to trade based on that. HFT applications also it's being used for, so it is able to exploit micro inefficiencies in high frequency markets. Hybrid evaluation, a combination of LSTM and attention layers, is also improving the predictive accuracy of these models. So the final takeaways of transformers is, transformers excel at spotting long term trends and finding the sentiments from the text, and they are context rich patterns also. So that is what they excel at. And they're good at finding which piece of data is more important, and which piece of data weighs more or is more important for predicting the future. Okay. And they can even analyze the text also, that is their specialty. If you see, if they're combined with some technical indicators, LSTMs, or on their own also, they're able to generate very good returns compared to the traditional models. That's why there is a new wave that these transformers are going to be more useful in getting good returns in the financial markets. And this is all AI, so this is all cutting edge that's happening right now in the market. So backtests are very good. If you see, I've gone through these Chinese equities and the Bitcoin HFT. They basically show that improved returns are there when risk is properly adjusted. And due to these reasons, adoption. Right now, the adoption is only in academic and internal pilot stages. Commercial tools and codes are still emerging, and they require some specialized expertise. But this is a thing that's happening, and it's promising basically. And if it is able to live up to its backtest data in the actual world also, this will basically improve the returns. Okay. Yeah. So yeah, all in all, what these transformers are doing is they are bringing language grade intelligence to financial forecasting, and good exciting results are coming across multiple markets and time frames. Okay, so that's the final takeaway, and it's outperforming major traditional LSTM models also, as well as the traditional momentum strategies also in a few of the examples. So that's the transformers for you guys today. So that's a new AI model that is the back testing done on Chinese markets, Middle East stocks and equities, and BTC. It has outperformed and provided consistent results, and is able to capture long-term trends and find sentiments from textual data. And something it has is attention mechanism, and identifying which pieces of information are more important, and it's basically performing better than LSTM models. So yeah, that's about transformers, the AI models that are being used in financial markets for trading. Thanks everyone for joining the call. Have a nice day.